Okay. We said we can include what? Transport. We can also include the import duties.
Is
Let's
it
just
not
say
only the
taxes.
non-refundable?
What do you say?
Sorry, the import duties. Is it not only the non-refundable import duties?
Yes, it's non-refundable because if they are refundable, they can be claimed. Shall I say non-refundable in bracket?
Yes, please.
Okay. The non-refundable. Okay. You wrote test two. Was there PPE in test two?
Oh, yes.
It was there. PPE note.
Yes.
General entries, were they there?
Yes.
Yes.
Okay. Any theory? Any theory in terms of IS 16
No.
and 38?
No.
No, nothing. Which means it's coming in the next test. But theory is what you guys can cram on your own. Okay. What else is included in the initial cost of the asset? What else?
Future costs.
Oh yeah, future cost. Kana, what is that other term that you say likes so much? Besides saying future cost, he likes saying
Deferred
deferred tax. Deferred payment.
payments.
Yeah.
Sorry, but
Okay,
deferred payment and future cost is two different concepts.
What?
Isn't it? Deferred payments and future cost. It's two different concepts.
Is two different concepts.
According to me, it is.
But they must all be recorded at what? At the present value. Okay. Am I wrong?
You are correct, but according to me, it's two different concepts.
Okay, yeah, it's two different concepts, I agree. But they are all accounted the same. Am I wrong? I can see the hand there. Just unmute yourself.
Sir, I wanted to ask if you could please explain the concept of future cost, please.
Okay. Future cost.
Yeah.
Let's say they assume or in the future. Okay, let's say, what can I say? You purchase the asset,
Yeah.
Okay, you purchase asset, and then they say at the end of the useful life of this asset, this kind of cost will be incurred. That is the future cost.
Okay, but what type of cost are we talking about? Are we talking about like a selling cost or what?
Selling cost.
I don't know, because now I am also confused. Yeah, that's the thing.
Eish. CJ.
A future cost is like a dismantling cost. Let's say they're building a oil for frying chips. After 10 years, they're gonna have to dismantle it or break it down or something like that. And
Okay.
that's gonna cost money. That's a
So
future cost.
what is deferred payment?
Okay, wait. Sorry. So a future cost is the cost of getting rid of an asset. Maybe something like that.
No, not entirely.
Okay, what can we say? What is deferred payment? How can one define deferred payment? CJ.
Deferred payment is a payment that is happening over a period of time, let's say 12 months or so, that is not
Yes.
paid immediately. It's almost like a credit.
Okay, so deferred payment and future cost, how do they vary according to you, CJ?
So just repeat the question.
Deferred payment and the future cost that will be incurred on the asset, how do they differ?
How do they give us it in the exam, or I don't understand the question?
How
Like-
are they different?
How can you differentiate them?
Deferred payment is something happening now, and future cost is something that is intertwined with our purchasing of, let's say, an asset. So it's not happening now, but it is going to happen in the future.
It's going to happen in the future. Okay, it is going to happen in the future, ne? Actually, this conversation, it can also help you in terms of the theory. If they ask theory, it can also be asked in that way. Okay, according to the way I hear CJ speaking, ne, I can say deferred payment, it must be recognized at the present value. Agreed deferred payment, it can either be dismantling cost, maybe they assume it at the end of the useful life. Let's say the useful life of the asset is 50 years, but we don't want the value after 50 years. We want the value currently now. I don't know if you guys understand me on that. We want the current present value. Let's say this asset was purchased 10 years ago. That 10 years ago, remember, it must depreciate. You need the carrying value. In the current year, you need the carrying value. Ne? And also, this deferred payment, it also had deferred payment on the time of purchase. Remember, it's 10 years ago. But I'm currently sitting in 2025. I want the value currently now. What will I do? I'll calculate the present value back there 10 years ago. And on top of that present value, I have to add what? The interest. Am I not losing anyone? Am I confusing?
No.
Yes, please repeat, sir.
Yes, please repeat.
Okay, let me make a scenario. Ne? Let me say, for example, an asset was purchased. Let me do this. Okay, let's continue. Let's say an asset was purchased. Where am I now? It was, oh. Let's say an asset was purchased. Just give me any year. Which year? Let's say 2016, ne? On 1 Jan 2016, ne? Then now, our current financial year is 2025. How many years from 2016 until 2025? 16, 17, 18, 9. Okay, 2025, 31 December. Ne? I just want it to be in 12 months, 12 months, 12 months. Okay. Can you see now we are currently in 2025. This asset had
10 years.
It's 10 years. Okay, 10 years, ne? This asset was purchased in 2016, but I'm currently in 2025. They say I must prepare the property, plant, and equipment for this asset in 2025. Do you agree? In 2016, I don't know if I should make up my own values or what. In 2016, I was going to recognize what? The present value. Do you agree? The present value of the deferred payment. I was going to recognize the present value of that deferred payment. I must add interest for 2016, 2017, 2018 until 2025. Currently now, if I measure the cost of that asset, it must include those interests. Do you get my point? Agree? At initial cost, it was going to be the purchasing price plus any other directly attributable cost, and also plus that deferred payment at present value. Currently, where I'm sitting now, I must include interest for each year. I don't know if you get me. Okay, maybe we'll see that in a question paper. I've never checked any question paper. If any of you has like a question that thinks or which can be more difficult, please send it to the group. We will see it now as we work on this thing. The other thing is the future cost. The future cost, if they say they assume 25,000 will be incurred in the future, what do we do? It's more like deferred payment. Remember the rate that we use, it may be given as an accounting policy. I don't know if you are familiar with that. Are you familiar with that?
Yes.
Okay. The same rate, the same N, like the number of years for this future cost. Let's say they will say it will be incurred after 5 years. For here, for this future cost, the N will be 5 years, the same rate, and then you get what? The present value. Now you to also grow with interest as going forward. I don't know if you get me. Which means with the first part I'm done. What is the second thing? We have to depreciate. When we depreciate, there are 3 methods that can be tested. It can either be the cost method. It can be, what is that those other 2 methods? Diminishing balance method or reducing balance method. They can also be, what is that thing? Units of production method. You're still familiar with that again from last year?
Yes.
Okay. Then the other thing with cost model, we can also impair. Oh, okay. Can I ask? Can we apply any revaluation model inside cost model? Can we have any revaluation surplus, revaluation expense? Can we have those things in cost model?
No.
Okay. Then the next thing, we can also have the impairments. Impairments. There are specific rules under this topic, under impairments. Now, can I just admit this person? Okay. With regards to impairments, there we have something that we call the impairment loss and impairment loss reversal. But there is a way to get them. What must we first do? I agree we must first depreciate the asset until the date the event occurs. You agree?
Yeah.
You agree?
Yes.
And
Okay.
please just repeat that.
I'm saying before we can impair, before we can determine whether we have the impairment loss or not, we first have to depreciate the asset until the date the event occurs. Do you agree?
And that is
Yeah.
only when they say impairment losses happens at the end of the month or end of the year, and not at the beginning.
Yes, I'm saying until the event is when you find those fair values in the question paper. That's the day the event occurs. It can either be at the beginning, it can be at the end, it can even be in the middle of the year. Okay. So here, the impairment loss, we have to determine what? The recoverable amount. The recoverable amount is made up of 2 components.
Value in use.
This
Full
is
value. Wait, yeah, it's full value.
the higher.
Full value. No, is it?
Okay, you can either say the higher between, let me just say the higher of, Let me write what we're supposed to write in the paper. The higher of fair value less cost to sell. Remember, it may not always be given just like that, ne? They can say
Oh,
they can say they can say fair value.
Something like that.
Let me
It
just
must be a place with
Sorry, I can't hear anything.
So you're on mute, I think. Yeah.
We can't hear you.
oh, sorry, can you hear me now?
Yes, we can hear you now.
Oh, sorry, I don't know how I muted myself. Ne? Maybe I pressed something by mistake. Oh, I was saying the recoverable amount, you must always write it this way. The higher of fair value less cost to sell or the value in use. Ne? It has marks. The highest between the two, you must determine that as the recoverable amount. Are we together?
Yes.
And then secondly, you compare it with what? You compare that recoverable amount with what? With the actual carrying amount, not the historical carrying amount. Ne? You compare recoverable amount with the actual carrying amount, and you can only impair if your actual carrying amount is, where is that greater than thing? Greater than sign. Hey, laptop. Oh, you can only impair if your actual carrying amount is more than your recoverable amount. Are we together there? Are we together?
Yes.
And a note. Let me say note. You cannot have impairment loss reversal without having impairment loss first. Hope we are all familiar with that. You can not have any impairment loss reversal what can I say? You cannot have any impairment loss reversal. Okay, this is the next step. Ne? This is the next step. Okay, the first step that you must know, you must impair first. Ne? You must impair. You must have impairment Impairment spelling. Impairment loss first, ne? And this is when I'm taking this step here. This is whereby your actual carrying amount is higher than your is where your actual carrying amount is higher than your recoverable amount, ne? Then secondly, you must know you can also have the impairment loss reversal, but this impairment loss reversal is limited to what? What is it limited to?
Historical carrying amount.
Okay, thank you. You can also have impairment loss reversal limited to HCA. When you talk about HCA, we're talking about the asset depreciates normally as if like no any other event occurred. I don't know if you get me. Which means if depreciation per year was 100,000 for historical carrying amount, each year it will always be 100,000 until the end of the useful life of that asset. So what do I mean by that? If you are agree when you have the impairment loss reversal is when your recoverable amount is greater than your actual carrying amount. This is the reversal, agree. This is the impairment loss reversal. Do you agree? Good people. Sorry?
Yes.
Okay. You see, now you can reverse, ne? But if your recoverable amount is more than actual carrying amount, RA again, the recoverable amount is also more than your historical carrying amount. This is where that principle enters. This is where we mean it must be limited to HCA. This is where you can no longer compare. I can remember the normal reversal was going to be RA subtracting ACA. That was going to be your normal impairment loss reversal. But now, since RA is more than ACA and also RA is more than HCA, this is what you must do. Just an easy method, ne? Here, listen to me. Your impairment loss reversal. No longer focus on. I'm typing error. Impairment loss reversal. You're no longer focusing on the recoverable amount. Ne? This is what you must do. Your new actual carrying amount must be the same as your historical carrying amount. What must you do for them to be the same? You just take your HCA less your ACA. Am I clear? Am I clear?
Yeah.
I'm not losing anyone again. I'm not losing anyone.
No.
Okay. This is all about impairments, ne? What else do we have in cost model? We're gonna have things like what changes in estimates, ne? Changes in estimates. When they talk about changes in estimates, what comes to your mind? They are talking about what? The useful life of the asset. Remember, now they can come with everything. Ne? They can say, prepare another PPE ledger account, not ledger account, man, PPE note. coming with everything, changes in estimates. What else is there? There is also, okay, there is in payments, there is changes in estimates, there is changes in assets. You are aware of that? Exchange of assets. Okay. In changes in estimates is actually, let's say, our original useful life of asset was how many years? Was 10 years, ne? Was 10 years when we bought the asset. Okay, now they estimate that the asset now they estimate that the useful life of the asset is how much? Can someone give me any year? It can be more or less. Shall it be
11.
more? 11. Aye, it's too close.
15 years.
Okay.
20.
Okay, 20, ne? 20 years. What they mean about changes in estimates. And remember, I don't know if you guys are using different methods, but mostly it's reallocation method. Are you familiar with that?
Yeah.
Okay. And then they say they use reallocation method. In reallocation method, you have to take the estimated useful life and depreciate from, let's say this asset was purchased 5 years ago, ne? Remember the original useful life was 10 years, ne? It already depreciated for 5 years here, ne? But now there is changes in estimates. What you can do, you must take the estimated useful life and do what? You take it as if it was the original useful life and depreciate over the remaining useful life. I don't know if you get me. Am I too confusing?
I think you should do an example maybe.
In a question.
Because,
In a question. Okay.
So
Yes.
So you were saying that we continue with depreciation on the estimated life, right?
Yes.
Okay. So then that means if I have 5 years left, okay, the 5 years of the depreciation. So that means I now have 15 more years left to calculate the depreciation.
That's correct.
Okay. Thank you.
It's like you take what was already lost here and subtract it from this 20 years.
Okay, so I understand.
Now your remaining useful life is no longer 5 years. That was remaining before the transaction took place. It is now the new estimated useful life less
the depreciated years.
Manje ra utlwana kae? All right. So what must I do? Shall I go straight to the question paper now?
Please.
Okay.
Can you just
I only
finish
open
your
one question paper.
sentence?
Sorry?
Can you just finish your sentence on the Word document, please?
Oh, sorry. You take the estimated useful life and subtract depreciated, spelling, depreciated, yes, you take the estimated useful life and subtract the depreciated years, you will get what? You will get the remaining useful life of your asset.
Wait,
Sorry?
can I ask, ne?
Yes.
So you're saying, okay, when we get to the 5 years and then now we change it to the useful life is 20 years. The next time we do depreciation, are we going to calculate over 15, which is the remaining useful life?
Yes.
Oh, okay. And then
okay.
Next.
In short, what I can say, the moment they say the estimated useful life is this and they apply the reallocation method, just take that number of years that they say is estimated and subtract then all the number of years or the months you already depreciated the asset.
Okay, then what's the other one? Can we please do it after we are done with the paper? The other change in estimates thingy.
Which other?
I agree there's the
Cumulative
reallocation.
catch-up method.
Yes, cumulative catch-up.
The catch-up method.
Yes.
Can you please
Okay.
scroll up on your Word document?
Can I go up? Where? Here?
Yes, thank you.
Okay. But ma'am, this Word document, I will send it in the group. Since now I have to move, can I just scroll? I will send the notes.
Yes, it's fine. Thank you.
Okay. All right. So, by the way, when I'm talking about this remaining useful life, what do I mean? You're gonna depreciate the asset over this remaining useful life, but you no longer use the cost. What do you use? You use the carrying amount. I'm not losing anyone again. You're gonna take what? Your carrying amount and depreciate over the remaining useful life, not the estimated useful life as it is, only the remaining. And you no longer use the cost of the asset. You're going to use what? The carrying amount of that asset to depreciate. I'm not losing anyone again.
Sorry, can I ask?
Yes.
With what you said here, so it wouldn't matter if they said that they depreciate the asset over straight line or reducing balance. You just take the carrying amount. That thing does not matter anymore.
It doesn't matter. You just take. You just use the carrying amount always. Whenever. Okay. Let me just say it this way. Even if we have the impairment loss. After we had the impairment loss, we no longer depreciate the asset using the cost. We depreciate the asset using the actual carrying amount over the remaining useful life. I'm not losing anyone again.
So just to confirm, we're using the carrying amount we got just before there was a change in the estimate.
Yes.
Okay.
Yeah. I'm not losing anyone again. Like I said, you're gonna take, let me just say, you use actual carrying amount to depreciate the asset over what? Over the remaining useful life. It's clear again. Let me just highlight this so that people can see it's important. Now, which other method did you say I should focus on?
The cumulative catch-up method.
Or the catch-up method?
Yes.
Did they also say it will also be tested?
No.
Even to us last year, it was not tested. So I don't know if you'll also get it or what. So mostly they're using this thing. They're mostly using the reallocation method. Even for me this year, they are still using the reallocation method. So I don't know, or shall we go and touch over that now?
Sir.
Yes.
I want to ask, right? So is it possible to have a question where we'd have to do the cost model together with the change in estimates?
Yes, it's
Okay.
possible.
Okay.
It's possible. It's possible. Everything that you see in the slide, it can happen. It's everything
Like,
that.
okay. I'm sorry, but can it happen within like the same scenario, within the same question?
Can it happen what?
Like within the same question where they say, okay, we have this, we have to use the cost model and everything, and then they tell us that the useful life is now changed to this and this. So now we have to do the change in estimates together with the cost model and everything.
Yes. For that specific asset, not for all assets. Remember, you can have 3 assets. You can have equipment, you can have vehicle, you can have maybe,
Yeah.
I don't know. You can have different assets. On this asset, they can test exchange in assets. On the other one, it can have changes in estimates. I don't know if you get me.
I do, sir.
All right. So the come catch up method. Okay, the come catch up method. Here, they say you must adjust the carrying amount as if the new estimate was used in the beginning. It means if they say the asset was depreciating, let me go back to this example. You see, this asset was depreciating over the original useful life of 10 years. With the catch-up method, you started from where you purchased it, but you depreciate using this estimated useful life. I don't know if you get me. You no longer determine the remaining useful life here. You're going to take this asset cost over the estimated useful life. I don't know if you get me. Okay, sorry.
Yeah, we get you. We get you.
Okay. Sorry. Did you hear me? Sorry. Can anyone hear me?
Yes.
Please explain that again.
Oh, I was saying with the catch-up method, the catch-up method, you no longer say, okay, my original useful life was 10 years. Now my estimated useful life is what? Is 20 years. I no longer say, prior year, I depreciated over useful life of 10 years. I lost 5 years. Can I use the same example? Prior, we said the asset was depreciated 5 years, for 5 years. The remaining useful life on this 10 years was 5 years. But now we had the changes in estimated, the changes in estimates. They're now saying the estimated useful life is 20 years. I can remember with the reallocation method, we said from this 20 years, we subtracted the years that have been depreciated on that asset, and then we had the remaining useful life of 15 years. Then we used the actual carrying amount to depreciate the asset over that remaining useful life. Now, with the catch-up method, we no longer focus on determining the remaining useful life of the asset based on the estimated useful life. We're taking this estimated useful life as if it was the original useful life of the asset. Then we adjust the carrying amount based on that. I don't know if I'm losing people, but you don't have to stress too much about this one. It is not tested in most cases. I don't know if Sir said you should focus on it, but now as I remember it, where it was phased out. Or did they say you should also focus on it?
They say
No,
this.
they didn't say.
But they didn't specify you focus on reallocation and this.
Nah, say that we must not. They won't test it because it is time consuming. So that guarantees that it won't be tested.
So, we are mainly focusing on the reallocation method, ne?
Yes.
Okay. So far, with the reallocation method, are people understanding what's going on?
Kind of, Mara, yeah.
Okay, you will see in the question paper, ne?
Yes.
How we account for that. Okay, the last thing that I wanted to put on this note is the exchange of assets. Ne? With the exchange of assets, I just want to put it so that we can move firstly to the questions. Ne? And remember, these principles that I'm teaching here, they also apply in the intangible assets. So when we go to intangible assets, it's going to be quite easy since we are familiar with the cost model. Are we together? So in changes, the exchange of assets, ne? Exchange of assets. It also has its own rules, ne? The exchange of assets. Please admit the person in the lobby. When we come to the exchange of assets, we just enlarge it so that it shows it's a different line item. Okay, with the exchange of assets, okay. Now, with the exchange of assets, there are certain rules, ne? They say we must use what? The first rule. You must use what? You must use fair value of what? Of the asset given up. Ne? That is the first thing, which has no condition, ne? But there are others. Do you remember the first thing is use the fair value of the asset given up or the asset received, ne? Asset received or the new asset. So I want us to talk about this fair value of the new asset. They said or fair value of new asset. The fair value of this new asset, listen to me, it can only be used if they specify it is clearly more evident. Have you ever met that thing? Have you ever met this narrative?
Yes.
Only, I want to make this small because it's going to take space. Size 14. Yeah. Only use our use if they specify. You don't have to determine, they will tell you in the paper. If they specify that the fair value of the asset received is clearly more evident, you can use the fair value of the asset or of that new asset. But other than that, you can now you can use the fair value of the asset given up. There is also a condition of where they can say you may also use the what is this? The carrying amount of the asset given up. Am I wrong? If they specify that clearly more that's the condition about the fair value of the new asset. Ne? Remember, they can give you fair value of the asset given up and give you fair value of the new asset, but keep quiet. They don't specify it is clearly more evident. The moment you don't see the words, it is the fair value of the asset received was clearly more evident. It means this option won't be exercised. It means you're phasing it out, ne? there is another condition. The other condition says you can also use what? Use carrying amount. Yes.
At the fair value of the new asset, we said it's if it's more clearly evident.
Yes.
Is it then the same as the fair value of the given up asset is not available?
Okay, CJ, I'm gonna get to that portion. Remember, fair value of the asset given up, it may also not be given, but they give you the fair value of the new asset, ne? But they don't specify it is clearly more evident, ne? Which means you must go and check the other option, which is the carrying amount, ne? When can you use the carrying amount of the asset given up?
Lack of commercial substance.
Aha. This one, the transaction can either have commercial substance or it can have no commercial substance. Ne? Remember here, you can only use the carrying amount of the asset given up only if the transaction, they can say the transaction lacks, what is that word, can? Commercial substance, ne? Like commercial, commercial substance, or they can say no commercial substance. That's why you can look at the option of using the carrying amount of the asset given up, ne? Substance.
Say.
Yes.
What is commercial substance?
I can say what?
Could you please elaborate on the commercial substance? Yeah.
Okay, let me say when they exchange, what can I say? Assets which are similar, that is commercial substance. I don't know if you get me. Let's say they're exchanging a motor vehicle for a motor vehicle. Can you see it's like
it's
similar assets?
So it's like the same thing.
Yeah, it's like it's more like the same thing.
Oh, okay. So then if it's the same thing, we just use the one that we are giving up.
Not yet, ne? There is another principle that I must take into account for this carrying amount for it to be used. I'm not yet done. Again, I said if the transaction lacks commercial substance. And again, I'm not yet done. Ne? And again, fair value of both assets. When I'm saying both assets, I'm talking about both the asset given up and the new asset. Ne? If this fair value of those assets cannot be reliably measured. Ne? Can you see this option? It can only be exercised. Let me just put this. I want to change the color. Okay. You can only use the carrying amount of the asset given up if the transaction lacks commercial substance or fair value of both assets cannot be measured. That's why you can opt for the carrying amount, ne, of the asset given up. What happens if you're not given fair value of the asset given up, you are also not given the fair value of the new asset. That's where you can go and check the requirements of this carrying amount of the asset given up. I don't know if am I losing you?
No.
No.
You sure?
Yes.
100%.
It's conditions, ne? Always. Okay, not always, ne? in most cases, this is given. Asset given up is given. Ne? Fair value of the asset given up is given. And also, this one, it can also be given. Actually, let me say everything can be given, ne? But remember, for this new for the fair value of the new asset to be utilized, they will have to specify it was clearly more evident. That's why you can opt for it and avoid the fair value of the asset given up. That's the only way you can use the fair value of the new asset. If they give you fair value of the asset given up and they also give you the fair value of the new asset, they also give you the carrying amount of that the asset given up, you must check. Sorry? Okay, we can continue, ne? Like I said, they can give you the carrying amount of the asset given up, they can give you fair value of the new asset, and they can also give you the fair value of the asset given up, ne? Okay, let's talk now. Let's talk about this, the carrying amount of the asset given up. The moment you see fair value of the asset given up or the fair value of the new asset, can you still check the option to use carrying amount of the asset given up?
Yes.
No.
Yes.
No.
Who said yes?
No.
What's the question?
It's a lack of commercial substance.
Yeah, but like if they give you the fair value of the asset, don't you use the first principle that you actually have though? Because it's the maybe.
Okay, listen to my question. Ne? Okay, let me explain this principle again. I'm saying you can only use the carrying amount of the asset if there is no commercial substance. Ne?
Yeah.
And also the fair value of both assets cannot be measured reliably. Did you hear me? I didn't end here. I didn't end at commercial substance and say, okay, I can use carrying amount of the asset given up. I'm also saying, also if fair value of both assets cannot be measured, that's why I can opt for the carrying amount of the asset given up. Now I'm asking you, if I'm given either fair value of the asset given up or the fair value of the new asset, can I still look for this option?
No.
No.
I'm not losing anyone again.
Sir.
Yes.
Okay, then let's say I have two assets, right? I have two assets, and then they are not of commercial substance, but I have the fair values of the both of them. So that means I can then use the fair value of the asset that I'm giving up, right?
I didn't get your question.
It's not more of a it's more of a question, but I want your confirmation. So I'm saying if both of the assets have no commercial substance, right?
Okay, look, ne? The commercial substance refers to the exchange, this transaction of exchange. If they say the transaction lacks commercial substance, not the assets have no commercial substance. I don't know if
so okay, so no, please explain. Sorry.
Yes.
Explain. Sorry, I'm sorry. Yeah.
Okay. Can you see what I said? I said the transaction, not the assets. Obvious that the assets are included in the transaction. I don't know if you get me.
Okay.
Which means I'm talking about that if they say the transaction lacks commercial substance, the exchange transaction, not the transaction, the exchange transaction lacks commercial substance. That's where you can check the requirements of using this carrying amount of the asset given up. So what was the question again?
Ish, yeah, I'll come back to that one again. I'm sorry, yeah. I'm just trying to, yeah, I'll see.
Okay, any other question? Yeah, we're now going to do the question paper, ne? Any other question?
You didn't finish with the question that you were asking. You just you didn't finish. Because some
the
people
question
are
that was
saying yes, some people are saying no, and
oh, my question was, if you are given the fair value of the asset given up or the fair value of the new asset, can you still opt of using this option of using the carrying amount of the asset given up?
no.
No, why?
Because like the fair values can be measured, reliable measured.
Okay. Now, can anyone see that this option can only be exercised if both requirements are met? Sorry? Good people.
The lion is back. This is the return of the tiger. I am back in Kawem.
Are you asking a question? Okay, thank you. Is there any other question based on this? The exchange of assets. Remember on your slide, they just put what? Use fair value of asset given up. They don't tell you or when can you use that, the fair value of that asset given up and with the asset received. And you see with the carrying amount, they also said fair value of both assets cannot be measured reliably and also no commercial substance. They just left it like that. So now I tried to interpret it according to my own understanding. Yeah. I don't know if I confused you. Yes?
There is a summary on Ifundi that our lecture did for us.
Or they gave you the summary?
Yeah.
Does it explain what I'm saying?
Yeah, it does.
Okay, okay. I'll check it out and send it again in the group, ne? So that people can have it. Is this class still recording? Let me see. Oh yeah, it's recording. Okay. So now I want us to go to the question papers, ne? I'll just check some. Okay, let me first see the one that I opened. What does it have? It has PPE cost model with impairments, ne? And also revaluations. Okay, revaluation model is something easy. We can even see it next time when I see you face to face in class. So now let's see. They said prepare the property, plant and equipment note in the individual financial statement of Makukani. Okay. We have computer equipment, we have factory building. Oh, all right. Let's see. I want to see if revaluation is question 2. Okay, good shot. Yes.
Can you please explain major inspection?
Can I explain what?
Major inspection and how to treat transactions that are related to major inspection.
Oh, inspection. We have to come here now. On the initial cost here, the initial cost, we can also include the inspection cost. Do you agree?
Yes.
I forgot that. The inspection. Okay, the reason why this inspection cost is included. Let's now say you build a stadium. Can a stadium be used without being inspected first if it's safe for people?
No.
Yeah, that is why the inspection cost is not expensed. It forms part of the directly attributable costs. Ne? Remember, inspection cost. Yeah, it must be capitalized, but it must be depreciated based on its own useful life. Remember, they can say it is the policy of the company to perform inspection every 3 years. But remember, the original useful life can be 10 years, it can be 15 years, it can be 20 years. But inspection must be, the building or the asset must be inspected after every 3 years. What does that mean? The inspection cost, if it's 50,000, at the beginning of at acquisition, the inspection cost that was performed was amounting to 50,000. It must depreciate over 3 years, but the asset, together with any other costs, must be depreciated based on the useful life of the asset. I don't know if I'm answering you, sir. Am I answering you?
Yes, yes.
So with
Sorry, sir. Sir said that we should treat major inspections as a component.
It's a component. It's a component of the asset. I get. Am I? Who's that? Who suggested that? I can't hear you. You're no longer speaking.
No, I'm saying when we were in class, sir said that we are doing the exact same with inspections as we did with components. So it is more or less like a component. It's just another name.
Yeah, it's just another name, né? But I'm just talking for depreciation purpose. Né? It can have its own useful life. Do you agree? And it can be renewed anytime. And when it is renewed, sorry.
Yes, I'm saying it's true.
Yes, if there is a renewal of inspection cost, while it is not fully depreciated, remember you must do what? De-recognize it. Yeah, you know, there are many principles that I see you I didn't touch here. Even the overall asset, if they decide to sell an asset which is not fully depreciated, what must you do? It is not fully depreciated. In the PPE note, you will have disposal at carrying amount. Ne? You will dispose it using the carrying value. But if we were to say journal entries, what were you going to do first? What were you going to do with that carrying value that is left on the asset? You do what? You impair it. Did you hear what I said?
Yes.
Anyone? Okay, let me try to make. I don't know. Yes. Okay, I will just look for the question. Maybe the transaction may be there. But did you get my point when I said this thing? If an asset is not fully depreciated, before you can write it off, in terms of journal entries, you must do what? You must impair it so that it can be fully depreciated. I don't know if you get me.
Appreciate.
And remember, depreciation and impairment loss, they go hand in hand. They are all credited to accumulated and impairment loss account. Do you remember that? Okay.
Yes.
When you have impairment loss during the year, the amount of impairment loss on your PPE note, don't you edit together? Don't you transfer it to your accumulated? What is this? Accumulated depreciation and impairment loss at the end. Okay, I'm talking about this. Let me come here. Okay, let me come here. Let's say I have my PPE note here. Ne? Remember, it's what? It's cost at the beginning, ne? And then it's accumulated depreciation
and impairment loss.
Impairment loss, ne? And now I go to my movements. Also, before I go there, I must have what? The carrying amount, ne?
Yes.
Carrying value. Right now I can write the dates, ne? And then now I'll have my movements. In my movements, I can have additions. I can have what? The recognition of asset, ne? The recognition of assets. What else can I have? I can also have
impairment loss.
Impairment loss. Okay. I want to end here. Ne? I'm no longer going forward. This impairment loss, it can either be impairment loss or reversal. Ne?
Yes.
Yeah. Oh, sorry. Or reversal. And if it's impairment loss, I must subtract. If it's reversal, I must add. You agree?
Yes.
Now, these things at the end, let me just say I must have the carrying amount here, which must be made up of cost, and lastly, also accumulated. Remember the principle that I told you last year? For us to get here, ne? What did I say? I said it's number 1. Do you remember that? You still remember this method? Plus 2 minus 3. Do you remember this method? Why you just take your carrying amount at the beginning and then you go to your movements. If it's a plus, it's a plus. If it's a minus, it's a minus. Then you're going to get your carrying amount at the end. Do you still remember that?
We didn't even know, but now we know.
You didn't know? Those that were in my class last year. Do you still remember this method? I taught this. Do you remember it? Okay, I suppose we need some little bit revision, ne? And remember, here is when an asset is sold. What can I say?
Sir.
Yes.
Are you speaking about the derecognition of inspection costs? Do we also account for that in the PPE?
The what?
You said something about the derecognition of inspection costs.
Yes, it must be derecognized.
So
if it's in the current year where PPE is prepared, if that inspection cost was derecognized while it was not fully depreciated, it must be derecognized here because it forms part of the cost here. Do you agree?
Yes, of the asset, mostly.
Yeah.
Okay, sure.
But in terms of journal entries, ne? Listen to me. You see the amount that we're going to have here. Let's say here you had the disposal at carrying amount of the asset as 20,000.
Yeah.
Agree, it was not fully depreciated.
Okay.
You're going the journal entry for that. Okay, spelling. Correct. Okay. The journal entry when asset is not fully depreciated. What are you going to debit? You're going to debit what? Okay. It is depreciated, ne? But there is that carrying value that is left. I'm talking about this. Let me just highlight it. Where is it? I'm talking about this. Ne? If there is a value here, I'm talking about this. Ne?
Yes.
If there was a disposal at carrying value or the recognition of that asset in PPE, it was going to be recorded here. Ne? But in terms of journal entries, you must debit impairment loss. This is P&L. Ne? With which amount? The 20,000, ne? What are you crediting? I want to see. What are you crediting?
The asset.
Wrong. You know why?
Yeah.
Listen to me. What did we say here? We said 1 plus 2 minus 3 plus or minus 4, ne?
Yes.
This plus or minus, what does it mean? It's talking about if it's impairment loss, minus. But if it's impairment loss reversal, we're gonna add again. We're going to get what? Number 5, ne?
Yes.
Here, in this bracket,
it's a minus.
Okay, it's a minus, ne? I know, but let's start here. In this one, is this one. I'm gonna change the highlighting, ne? After. In this one, it's going to be 1. Okay, I'll change the colors after, ne? Can you see I'm only referring to depreciation, ne? I no longer say additions. I come to what? Depreciation during the year. I didn't write it. Can I just include it? Also depreciation for that current year. Yo. Okay. Can I just say minus 5 with the red color is equals to 6 here? I'm going to change color here, ne? Let me use, yeah. It's going to be this one, accumulated depreciation at the beginning plus okay. I'm going to do another plus or minus, ne? But spacing. This plus or minus, remember, it's impairment loss, ne? If it's impairment loss, it's plus, but if it's impairment loss reversal, it's plus. Oh, no, I think I'm making a mistake. If it's impairment loss reversal, it's minus. If it's impairment loss, it's plus. Did you hear what I said? Eh?
Yes.
Or shall I write it here? Yeah, let me just write it here. This is accumulated depreciation when? At the beginning. Ne? Plus what? Depreciation during the year. Also plus if there is any impairment loss. This is okay. Can I say or less? Subtract. Write it less reversal. Less impairment loss reversal. And then, okay, this is accumulated depreciation at the beginning of the year plus depreciation plus impairment loss or less impairment loss reversal. What did I leave? Oh, lastly, you must subtract the accumulated depreciation of asset. And here, I'm only talking about all the accumulated depreciation of the asset until the date of disposal, not the value that was left. Ne? Can anyone hear me? Good people.
Yeah.
Am I losing you?
No.
You sure?
Is there other way you can explain it to me? Because I am so confused now.
Who is it CJ?
Yes.
Okay, CJ, do you agree that your okay, let me talk about the carrying amount at the end. CJ, How do you normally calculate your carrying amount at the end of the year?
Are you asking how do you get it?
When how do you calculate your carrying amount at the end of the year?
I first calculate the cost at the end.
Or you first calculate the cost at the end, and then your accumulated depreciation at the end. How do you calculate it? I want to hear your side. How do you calculate it? You take what? Your accumulated depreciation at the beginning, and then you do what?
Let me just get my PPE note.
Okay.
So you're asking how do I get the cumulative depreciation and impairment losses at the end?
Yes, yes.
So I said it's opening accumulated depreciation.
And then?
Plus depreciation for the year.
Yes.
Plus impairment losses for the year.
Yes.
Subtract impairment losses for the year. Impairment loss reversals.
Reversal, ne? Okay.
Then I say, then I subtract the disposal or derecognized accumulated depreciation.
This is what that derecognized accumulated depreciation is the accumulated depreciation of the asset sold or disposed, but only until the date of disposal. Am I still losing you?
No, I'm fine.
Okay. Did you hear what he said? Okay, CJ, I'm gonna give you a quick method, ne? For getting the carrying amount at the end. This carrying amount, without doing cost and accumulated depreciation at the end. For you to get this carrying amount at the end, you can easily just say your carrying amount at the beginning of the year, ne? Then you go to your movements. On your movements, where there is plus is a plus, where there is a minus is a minus. If we talk about additions, you know it's a plus. You're just gonna take that carrying amount at the beginning of the year, you add those additions. If there is derecognition of asset, you subtract. If there is impairment loss, you subtract. If there is impairment loss reversal, you add. If there is, and also depreciation, you subtract. Then you are done. Did you get the method, CJ?
I'm understanding what you're saying, but is this regarding the PPE note or a general journal entry?
Oh, it's a PPE note. The journal entry.
But in the PPE note, aren't we getting marks for calculating closing costs? Because they are checking our calculations for cost and accumulated depreciation. We normally get like a principal mark for carrying amount.
Okay, they are checking them, ne? But here I'm trying to help. You see, someone who is not that good in accounting. Let's say maybe the person forgot this method. You see, forgot this method, or how can I get the accumulated depreciation at the end of the year? We can help him by saying, get the carrying amount at the end without determining these two. I don't know if you get me. Without determining the cost and the accumulated depreciation, the person can get the carrying amount easily by just using the movements and the carrying amount at the beginning. I don't know if you get me.
No, understanding what you're saying.
Okay, Mara, guys, please take note of what he said. Ne? It's important to know this method, and this is a full method. There is no other line item that can enter in here that we did not include. Am I wrong, CJ?
No.
Okay. Now again, on the cost. You see, the cost is the same procedure, ne? Is his cost at the beginning plus what? Additions okay, with cost, ne? You can only have cost at the beginning, cost of the asset that you purchased during the year, and also cost of the asset that you sold. What will you do with the cost of the asset that you sold? Not you, CJ. I want someone else. What do you do with the cost of the asset that you sold?
Subtract.
You will only subtract the cost, not the carrying value, ne? The cost only. Cost of asset disposed or sold. Are people now happy with these methods?
Sorry, with the borrowing cost capitalized, do we add it at the cost?
Okay, I must now come back here. You see now things are popping up one by one. Also, if there is borrowing cost, it must form part of my initial cost of the asset. Borrowing cost. And borrowing cost is depreciated together with the asset again in the same useful life. Are we together there? You see now things are coming in one by one. Are we happy now? Can I now go to the question paper? Oh, sorry. The journal entry was not complete, ne? I'm going to ask this question again. I said if the asset is not fully depreciated, I know I must impair it, ne? Of which I know I'm going to debit impairment loss. What am I going to credit? Not to UCJ. Which account can you credit? I want to see.
Sorry, can you just repeat the question?
Okay, I'm saying my question is, can you see, let me come here. On my PPE note, I have the recognition of an asset, ne, with the amount of 20,000. This amount, I'm having it because of the asset is not fully depreciated. Do people agree?
Yes.
Yes.
But in terms of journal entries, I know in my PPE note, I will call it the recognition of asset at carrying value, or I will call it disposal at carrying value. Ne? In terms of my journal entries, if an asset is not fully depreciated, what must you do? You must impair the asset. Ne? Now I want that journal entry. Remember, my first journal entry was going to be, okay, before an asset. Okay. I don't know if I'm losing you guys. Ne? The moment I say debit impairment loss, which account corresponds?
Sir.
Retain.
Sorry?
Sorry, I wanted to ask. Oh, no, it's fine. Sorry. I wanted to ask if it was going to be accumulated depreciation.
Wait a bit. There's someone who says something. Can that
Retained
person repeat?
earnings.
Why retained earnings? Let's come here, ne?
Cost of
Can you see you have it here? You have impairment loss here. Can you see you have it here?
Yes.
What does that mean? The corresponding account will be accumulated depreciation and impairment loss. Like I said, if you see this asset is not fully depreciated and I'm preparing journal entries, this asset is not fully depreciated. Of course, yes, it must be de-recognized in our books, ne? But before you de-recognize it, you must ensure that it is fully depreciated. But in this instant, it's no longer like last year. Last year you were depreciating it again, and then you credit accumulated depreciation. Ne? This year is the new principle. We no longer depreciate, we impair the asset. Are we together? Good people. Yeah? Are we together? Good people. I know why the people. Am I losing you? Huh?
I mean, I'm confused because, like, ain't we supposed to do the journal for the whole asset, like the impairment, the accumulated, and the cost, or you were just explaining the part of the impairment only?
Yeah, I was just explaining the part of I was just explaining the part of the impairment only.
Oh, I see. Thank you.
Yes, yes.
Say.
Yes.
Now I'm confused because I heard you speaking about the disposal of the asset before you did the journal entry. So I was thinking this was this journal entry is for what? Is it for the impairment loss or is it for the disposal of the asset?
Okay, this journal entry is relating to the disposal of the asset. It's not the normal impairment loss that you can write in your PPE. Where is that PPE note? It is not this normal impairment loss. I don't know if I'm answering you.
Okay, yeah.
It is there for the purpose of this recognition. Remember?
Okay, so can you please give me an example of how we would have done the journal entry if we were not doing the impairment losses? Let's say we were in first year again, right? We would create what? We would create the yeah. Could you just do the journal entry for me, please, so that I understand? Because with the impairment loss, it's now confusing again.
Okay, which kind of journal entry do you want me to do? If an asset is not fully depreciated.
Yes, if an asset is not fully depreciated and it's being disposed, but can you do it as if we're in first year and we don't know the impairment stuff?
Okay. Okay, I'm gonna come here. Ne? Okay, let's say the disposal at carrying amount amounted to what? 2,000, ne?
Yes, sir. Yes, sir.
In terms of last year's work.
Yes, please.
Okay. This means that you were going to do what? You were going to debit depreciation with the amount of 2,000, and then you credit accumulated depreciation with the amount of 2,000. The aim of doing this journal entry is to ensure that the asset is fully depreciated, so that when you cancel the asset out of the books of the entity, you're going to debit what? What are you going to debit? The entire accumulated depreciation.
And then I credit the asset.
The asset.
Okay.
At cost.
Yeah.
And at the values here, the values between this one and this one, they must be the same. If the cost of the asset was 20,000, you're going to debit the entire accumulated depreciation of 20,000, and also the cost of the asset, 20,000. Are we together?
Yes, sir, we are.
Yeah, and also here, similarly here, can you see here? I said impairment loss is 20,000.
Yes.
Okay, now can I remove this part?
Yeah.
Because you will never work on this part ever again.
Yes, I understand.
Now thank you. You understand now?
Yes, Minera, I do.
All right. So, other people, are you also following? Okay, I'll take that as a yes. Hey, people have been wanting me to do the question paper, ne? Oh, Guys, why aren't you telling me that people are lost in the chat box?
So that's the transcript. It's not the chat.
Oh, it's what I'm talking about here.
Yeah, it's so I think it's the conversation for the whole thing.
Oh, okay. Okay, no problem. I'm surprised, Evan. When have I been cheating? No, it's technology, ne? I didn't know. Okay. Now let's get to the question papers, ne? I'm not sure if I have enough. I only opened one question paper. I'm not even sure if it has everything, the exchange of assets or what. Okay, let's see. They said we must prepare the property, plant and equipment. Ne? I'm sure you guys can do PPE. What I'm concerned about is the journal entries. Remember, when they say prepare the journal entries, they want them in date order. Were you aware of that? Yeah?
Yes.
No.
Like, say, what if I don't put them in that order, but I write down the dates on the side? Because sometimes you can't keep track of the dates. Like, you just sometimes.
Well, in second year going forward, everything must be in date order. If it's not in date order, I don't know, because not every time papers are moderated. But if maybe your paper is marked by your best friend, he may give you marks. But chances are you may get 0.
Must we have a column for date?
Yes, it's important to include that column for date. Okay, let's look at the first asset, this factory building. You see, it's the construction of the factory building, which started on which day? The 1st of February 2018 at the cost of 4,500,000, and the building was available for use on the 1st of March 2018 and was occupied on the date. By the way, depreciation. We depreciate when the asset was ready for use, ne?
Yes.
Not when it was taken into use. Are we together?
Yes.
Okay. So let's see. On the 28th February 2022, Mr. Phillips, an independent valuer, performed evaluation of the factory building and revalued that an impairment loss of 100,000 has to be recognized. Can you see in 2022, impairment loss was recognized? But however, the accountant made the correct entry in the records of this entity in the financial year ended 28 February 2022. What is our current financial year? We are currently in the financial year 28 February 2023. Okay, I'll come here. Okay. Or shall I use Excel on this one? Yeah, maybe I think it will be more easier. What I'm trying to do here, I'm trying to make calculations. Remember, I'm currently in 2023. They are looking for property, plant and equipment only for 2023. They said the comparative figures are not required. If they did not specify that these comparative figures were not required, were you only going to prepare information for 2023? Yeah?
No.
What were you going to do? You're also going to include the prior year.
Okay.
Okay. So let's see. What is that thing?
But I don't understand the question stating, do we only do calculations for 2023? Can you just rephrase that question, please?
Which question?
No, you asked, do we only do calculations for 2023? So can you just rephrase that question, because I don't really understand.
Okay, I'm saying they said we must prepare the property, plant and equipment for the financial year ended 28 February 2023, ne? They specified here that the comparative figures are not required. If they did not specify that these comparative figures are not required, what were we going to do? We were going to include PPE note for financial year ended 2022 and 2023. Do you agree?
No, that I understand.
Okay. So for this question, the calculations that I must do, I must make calculations until 28 February 2023. Do you agree on that one?
Yes.
Yeah, it's what I was saying.
All right. No, I was just confused because I thought we said that we should do 2022's calculations as well.
We're doing calculations from 28, from the day the asset was taken into use, from 2018, the 1st of March. Did I answer you?
Yes, thank you.
Okay. All right. So we can see our first date was 1st of March 2018. On this day, we had the cost. How much was the cost? I'll just copy it. It was 4,500,000. Oh, I'm lost again.
You were busy on Excel.
Oh, I lost the document.
Sorry, are we busy with the HCA calculation?
I just put in the cost here. I will also come to that part. Okay, we can see the first event happened when? On this day, 28 February 2022. Are we together? Which means now I must depreciate from, oh, sorry. I must now depreciate from the 1st of March 2018 until 28 February 2022. How many years is that? 2019, 20, 21, 22. Can you see it's 4 years? Hey guys, can you see it's 4 years? Yo. And then laptop ka re tlo ntshwenya
Sir.
Yes.
I wanted to ask if it's possible to have another session tomorrow where we only do question papers.
Bro, my schedule is too busy.
It's tight.
Yeah, it's too tight.
That's fine.
Depreciation from one.
I'm sorry, I can't see your screen.
Oh, okay. Let me come here. Can you see it now? Can you see my screen now?
No.
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 It stopped sharing.
Mommy, but you have to do a job.
Can you see it now?
Oh. Oh, yes.
Yes.
Okay. We're going to depreciate from the 1st of March 2018. Oh, sorry. The 1st of March 2018 until when? Until 28 February 2022. Ne? Okay. Oh, sorry. 8 February 2022. Which is how many years? 4 years, ne? Which is for 4
Yes.
Okay. Let's see which method is used here. They're using straight line method, ne? Useful life of 20 years. So my depreciation will be 4,500,000 divided by 20 equal Do you agree my depreciation per year will be 2,250,000? Yeah?
Yes. Multiplied by 4.
Per year, ne? And then on 28th of February 2022, how much was it going to be? It was going to be this times how much? 4, ne? Is it 9 million? This is my total accumulated depreciation until this day.
It can't be 9 million. The cost price is then only 4.5 million.
Which means I did it wrong. Okay, it's 4,500,000. Okay, divided by 20. Did I do it well? Why is it 2 million?
It's 225,000.
Oh, 225,000. Oh yeah, now it's 900,000 again. Is it correct?
Yes.
Yes.
Okay. Then how much will be my actual carrying amount here? And remember, my actual carrying amount together with my historical carrying amount is the same at this stage. Do you agree?
Yes.
CJ, do you agree?
Yes.
Yes.
Okay, this will be
3,600,000.
Is minus this. How much?
3,600,000.
How do I enlarge this? I don't swing.
Yeah, right there.
Why is it still? Okay. I'll do it manual. 4,500,000 subtract 900,000. Is it this balance?
Yes.
I don't have to calculate my impairment loss, ne? They given me. What did they say?
100,000.
They said the impairment loss is 100,000, ne? So from this day, my HCA will still be this amount, ne? But my actual carrying amount will change. It will have to be the 3,600,000 less the impairment loss.
Yeah.
I didn't press equal sign. The 3,600,000 less 100,000, which is going to be 3,500,000. Ne? From this thing, I must depreciate the asset over the remaining useful life using this actual carrying amount. Do you agree?
Yes.
Okay, up to so far, when is the next event? From here, the next event is on 28 February 2023, ne? Which they give me my fair value less cost to sell and also the value in use. Ne? But before I even get to that, I must now calculate. Oh yeah, I didn't. Oh, I did. So let me just reshare it again. Ne? I press it by mistake. Is it visible again? Is my screen visible?
Yes.
Yes.
Sorry, you said we should calculate what?
We should now determine
the recoverable amount.
Before the recoverable amount, I must now depreciate. Do you agree?
Yes.
I must now determine the depreciation on this asset, which will be how much? It will be the 3,500,000 divided by what? The remaining useful life. 20 years minus 4 years, 16.
16.
You agree? It's for the full year, ne? This is the depreciation amount. Do you agree?
Yes.
Now on the 28th of 03/2023, what is my actual carrying amount? It's going to be
3
minus. Do you all get this?
Yes.
Okay, but what about the historical carrying amount? Do you agree with regards to historical carrying amount? Depreciation was going to be the same as if nothing happened to this asset. Okay, good people, do you agree? With the depreciation for the current year for this, I can either take the 4,500,000 I divide it by the original useful life.
Okay.
Or maybe it's because of the rent value, ne? Yeah. Okay, it's fine. Well, again, I can either take 4,500,000 I divide it by 1,500,000 I divide it by how much? 20. That's a normal depreciation per year. Or I can take the 3,000,000 over the remaining useful life, which is 60. I will still get the same answer. Do you agree? Good people.
Yes.
Yes.
Okay, so far, now I must get what? On which day? On the 28th of February 2023. I must now get my historical carrying amount, which is what? Which is equals to the 3,600,000 minus this. Do we all get that?
Yes.
Okay. All right. So now I have to determine my recoverable amount.
Okay.
Do you agree? Huh?
Yes.
Okay. The recoverable amount is the higher of value in use. What is the value for value in use? I'll just copy it. Ne? Higher of value in use and also fair value less cost to sell. What is the value for cost to sell? Yeah. The highest between the two is this one, ne?
Yes.
Okay. So now, since this is the highest, I must now compare this with the actual carrying amount. Can you see my historical carrying amount is more than my actual carrying amount? Can you see?
Yes, so we should limit it.
I now come here.
So
it's that principle. Sorry?
why is the actual carrying amount 3.6 million on the left and then 3.5 million on the right?
Take me through which one? You mean this?
Yeah, the actual the at the top, two amounts up at 3.5 million.
Which two
Why?
amount?
Exactly where your cursor is. Why is it 3.5 million?
Oh, remember we had impairment loss. Ne? Let me just write it separate. My actual carrying amount before everything was how much? Was 3,600,000. Remember?
Yes.
And then I also had the impairment loss. How much? It was minus 100,000.
Oh, okay.
See, there it is on the question paper. Can you see it? On 28 February 2022, they had impairment loss of 100,000, which had to be recognized, and it was correctly recorded in the account in the books of the entity. Do you agree?
Oh, okay, I see. Thank you.
All right. So now what must I do? I can see my recoverable amount is more than my actual carrying amount. It means I must have what? The impairment loss reversal. Ne? But I must also check if my actual carrying amount is it also more than my historical carrying amount. Yes, it's more than my historical carrying amount. Therefore, my impairment loss reversal will be how much? Impairment loss reversal will be HCA less ACA. Why did I do this? Anyone with the idea why I did this? Why I said the impairment loss reversal each ACA minus ACA?
We took the HCA because we limit it to the value. So the value in use was higher, so we should have limited it to the historical carrying amount.
Okay, thank you for that, CJ. What we actually mean, okay, we will have the impairment loss reversal, ne? Because my recoverable amount is more than my actual carrying amount. But my reversal, when I reverse, I cannot reverse more than my historical carrying amount. The normal impairment loss reversal was going to be 3,465,250 subtract 3,281,250. But since the rule says I cannot reverse more than my historical carrying amount, therefore I will only take this historical carrying amount and then subtract this. It will be my reversal. So this will be equals to this minus this.
I think it will be easier to show everyone on the graph.
On the
graph we are doing.
The graph.
Yes.
What do you mean by the graph?
The straight line, and then we have the X on top.
The what?
You don't know that graph.
Oh, okay. You mean this kind of thing where you have HCA and this side is ACA. You mean this? And then I show cost.
About that. I think everyone knows what I'm talking about.
Oh, okay. I see now. And then I'll have cost. I'll have accumulated depreciation.
No, it's not that. It's not that.
Which one is it?
No, if everyone is fine, if everyone is fine with this, we can continue. I'll just show you on a later stage what I'm talking about.
Okay, can you share what you're talking about maybe to the group based on this question so that they can also see?
I will do that.
Okay, thank you so much. So can I proceed now? Can I proceed? Oh, okay. Here's something that you guys must know. Ne? By the moment we had impairment loss reversal, can we still impair going forward? Okay, now it's off the books. Ne? I'm just talking like in general knowledge. Can you impair if there is a recoverable amount in the future? Can you?
Yes, I think you can.
Okay, I never made this scenario, ne? But since now the asset is now valued the same, my historical carrying amount and my actual carrying amount is going to be the same going forward. I don't think we can ever impair again.
Yes, you can't.
You can't, ne? Can you tell them why you say we can't?
Because it cannot go above the historical carrying amount since it's a cost model. You can't go above the line.
Okay. Now I think we're on the same page, ne? So if they were to say the journal entry for all this information, only for the current year, what were you going to do with it? I now have impairment loss reversal. It's not impairment loss. What will you debit? I want a journal entry for this impairment loss reversal. What are you going to debit? Can you debit impairment loss reversal?
Oh, you have to I think you have to debit the accumulated depreciation and impairment loss, and then credit the impairment loss reversal.
I'm gonna take you back to the note, the PPE note that I drafted as a note, as part of my notes there, with an amount of 93,750 credit payment the same 750. Let me take you back here. Here we said we add impairment loss and we less impairment loss reversal. Can you see the reason why we are debiting? Remember, accumulated depreciation is a negative asset. It will decrease on the credit side. It increases on the credit side. It decreases on the debit side. The moment you debit it, you show that you are is that thing. The moment you debit this, oh, and again, this is like an income, ne? This is P&L. It's like an income. This is the statement of financial position. Okay. Now, with regards to impairments, are people okay now? Or we will continue some other time with a different question in class when we meet in contact. I mostly prefer working by hand.
Yes.
Excel is a bit slow, ne? Okay. I think we did calculations for this asset, ne? And if we were to do PPE for this asset, we know very well our cost was going to be how much? Is it? If we were to do the PPE note for this transaction, our cost was going to be how much? How much was going to be the cost? 4,500,000, right? I'm talking about at the beginning, ne? Then my accumulated depreciation at the beginning. Let's come here. Where's that thing? It was going to be this balance. Do you agree? Hey, good people. It was going to be this balance. It was going to be this. What did I do now? 225,000 plus. Remember that impairment loss that occurred at the end of the prior year. This 100,000 plus 1,000. How much is it? 325.
I'm sorry, why are we adding the 100,000?
Remember, I'm trying to make the opening balance. Ne? Let's come back to the question. I'm trying
So
to
we're
make
doing the PPE note and not the general journal entry.
yes, it's the PPE note.
I understand.
Oh, okay. How much is it? The Excel doesn't want to work. Or shall I just do it here? 225,000 plus the 100,000 for impairment loss, ne? Oh, it must be in a negative form.
Sorry, why are we taking only taking the 225,000 and not the 900,000?
Oh, sorry. I'm supposed to use the entire 900,000. 225 is depreciation for the historical carrying amount for the current year. Askisne. Sorry. I have to take this one. I have to take the entire 900,000. Okay, let me just write it in a negative form. Negative 900,000 also include the 100,000 for impairment loss. Is a million, ne? Then my carrying amount at what date is this? 1st of March 2022. How much? It was going to be the sum of the two. We together on that one. Are we comfortable with the opening balances? Guys?
Quick question. We had an impairment loss in 2022.
Yes.
So would that not affect our accumulated depreciation that we had in 2022?
Okay, let me come back here. You're saying we had impairment loss. Let me come here actually. We had impairment loss when?
100,000.
On which day?
28 February 2022.
Yes.
So okay, no, I understand. Don't worry.
But remember, I'm preparing information for the financial year ended 28 February 2023. Ne? Therefore, my opening balances will be on the 1st of March 2022. You agree? My opening balances.
Yes.
That impairment loss is not within the current financial year. It happened on the last day of last year, of the prior year. I don't know if you can see. This 100,000. Remember, it was supposed to be accounted in the records on which day? On the 28th February 2022. Ne? Therefore, up until this day, I calculated my accumulated depreciation as 900,000 before taking into account the impairment loss. Can you see?
Yeah, no, I understand. It was just something I thought of, but it was wrong, so it's fine.
Oh, okay. When I come to my movements, I know I can have additions, I can have disposal at carrying value, but at this point, my movement is depreciation. And depreciation for the current year, it was correctly calculated. We don't take the the depreciation for the historical carrying amount. We take for the actual. We're taking 218,750, which is must be 750. This year we had impairment loss reversal as how much? 93,750. We don't have any other movements on this asset. Do you agree? It was only depreciation and the impairment was reversal. Am I losing you guys?
No.
No, okay. Therefore, I must now have my actual, oh, sorry, my carrying amount at the end. The date is wrong, ne? It has to be 28, 23. That method is here now, ne? Look, let's do it, CJ. I'm saying 1 minus 2 plus 3. It must be equals to 4. Let's do it. Equal sign. Plus the second one plus the third one. Do we all get this? Hey, good people. Right, it's fine. Do you all understand how I got this carrying amount at the end? Sabang?
I'm just a bit confused because shouldn't the carrying amount be equal now to the historical carrying amount?
Oh yeah, it's supposed to be equal to that. Let me see.
And it's not equal to that now currently.
Okana I reversed, ne? Which means something is wrong here. And how much should my impairment loss reversal be? I don't have a physical calculator with me. Let me see.
That is correct, but you didn't include it in your movements.
My what?
You include it.
My what?
No, I'm saying the impairment loss reversal is correct, but your calculation or your carrying amount is incorrect.
Okay, let me see. 3,500,000 minus 218,750 plus 93,750. Oh, it's wrong, ne? It means I was supposed to say. Okay, let me see this formula again. Maybe it's me with my formula. I'm saying it's 1. Let's say minus 2. I doubt. And then this one. Hey, I excel. When I use physical calculator, I'm getting the correct answer. It is supposed to be 33,750, ne? $33,75,000. Yeah, it's supposed to be this balance. When I'm using the physical calculator, it's correct. If I take 3.5 million, I subtract 218,750, and then I add 93,750. I'm getting 337,750. Is it fine this way? Let me see, man. Yeah, there it is. It means it's me who's wrong here. Is it fine now?
Yes.
And then the cost is the same. Now my accumulated depreciation and and impairment loss. This one, it will be, just confirm for me, CJ, if it is the correct one. It has to be the first one plus the second one
What's depreciation?
minus the last one.
The impairment loss reversal.
Yes. Is it the same? And again, I know this one here, it has to be this. Oh, sorry. This one here, it has to be this minus or plus. Keep on looking at that. It has to be this plus this. Yeah, act. Is this amount correct? It's incorrect. Is it this amount, CJ? It means my formula was
Sorry,
wrong.
I'm still calculating.
Oh, okay. Yo, you know, good people, I have a quiz which is about to become true. So, let me see. Can we just discuss this computer equipment, and then I will end the class. Because it has reallocation method. Can we discuss the computer equipment?
Sorry, I think what happened is we missed the impairment loss. No.
The what?
No, it's fine. I'm just thinking.
Oh, okay. Do we finish up this? Where is that asset? The computer equipment. This computer equipment, can you see? It has the useful life of 6 years. Ne? They're using straight line method with a residual value of 5,000. But on the 1st of March 2022, the total useful life of the computer was reassessed to be set as 4 years. It was purchased on the 1st of December 2020. We were going to depreciate this asset from the 1st of December 2020. Let me just do it here. This is for the computer. It was acquired on 1 December 2020. For how much? What was the cost? For 35,000, ne? For 35,000, right? So this computer equipment was going to depreciate from the 1st of, okay, let me just say for depreciation, it was going to be depreciated from 1 December 2020 until 28 February 2022. Do you agree? Okay, since I see where it's not full years, can I work this in terms of months? The useful life is 6 years, but can I turn it into months?
Yes.
Okay. Okay, and just do this. The useful life. And then in terms of months, I will take 12. 72 months in total. So for my depreciation purpose, I was going to take 5,000 less the residual value of 5,000. Residual value of 5,000. I was going to take 5,000, 35,000 less 5,000, and then equal sign. I got 30,000. This is my depreciable amount. I'm not going to take this 30,000. I divide it by 72 months, and then it gives me 416 whatsoever. Now I'm connect earring. So we're going to look for how many months from the 1st of December 2020 until 28 February 2022. Okay, how many months? How many months is that?
So you're saying from when the asset was bought until 1 March 2022?
Yes.
I think it's 15 months.
15 months. Okay.
Yeah, because it's 3 months from December until February, and then 12 months from 2021 until 2022.
A month is that I'm now looking for 15 months. It means 15 months used. And I'm now looking for that depreciation. I will have to take this balance times how many months? 15. Are we all getting 6,250? This is my total accumulated depreciation. Are we all getting this amount? Yeah, guys, are we all getting this amount?
Yes.
Okay. Just a second.
Sorry, I think there's a mistake somewhere.
Huh?
I think the cost price should be 35,000, right?
Yes.
So I said 35,000 multiplied by 15 divided by 72, and I got 7,291. But if I round it off, I got 7,292.
There is a residual value of 5,000 there.
Ah, shucks.
Which you need to take into account.
Okay, I saw my mistake.
Okay. So since now on this day they're saying on the 1st of March 2022, they're saying the total of the computer was reassessed to be set as 4 years. Ne? So now since we're using the reallocation method, what are we going to do? Okay, at first, what is my carrying amount? Let me do this. My carrying amount was going to be the 35,000 less the entire accumulated depreciation, which is 28,750. Now, reallocation method comes in. Reallocation method. What is the estimated useful life? It's 4 years, ne? 4 years. But in terms of months, how much will it be? 4. How much is 4 times 12?
It's 48.
Or 48, ne? 48 in total. But in this case, for the current year, we know we must depreciate the carrying amount over the remaining useful life, ne? But we take into account the original useful life was, well, the original useful life was 6 years, ne? But it is now reassessed to 4 years. In this 48 months, we assume that 15 months is already been used. What is the remaining useful life? The useful life will be the 48 months less 15 months that has been used. How much is the remaining months?
It's 33 months. I wanted to ask, Ne, and since we have this reallocation method situation, you said on that document when we first started the session, you said that we no longer account, or we no longer consider the straight line method or whatever the case may be. You said we take the carrying amount and make use of the remaining useful life.
Okay, the method is still the same. It is still cost method, but right, for depreciation purpose, we no longer look at the cost price. We're now using the carrying amount over the remaining useful life.
Okay, sure.
Yeah, yeah. For the current day depreciation, we were going to take 28,750. Do I just divide it by 33?
You still have to multiply by 12.
Okay. Like I let me ask you 2 minutes. Do I just divide by 33 times 12?
I'm not sure because I'm thinking there's a residual value in this case, so I'm not sure how.
CJ.
What's the residual value?
It's 5,000.
We subtract the residual value.
You see, always, ne?
Okay.
It's always the carrying amount less the residual value. Okay, can I just do this? Then you divide it by the remaining useful life. This is per month. Now I want it for the full year, ne? I'll take this entire process and multiply it by 12. This is our depreciation amount, of which when I round it off, I'll get 86. Sorry, 86. Is that what you're also getting? Are you also getting this?
Yes.
Yes.
Okay, guys. Yeah, ne? I hate to end the class, but I have a submission that I must make today. But thank you for joining the class, ne? The rest of the things that we did not cover today, we will see them in our contact class. I hope we will start with intangible asset note, ne? But like I said, with intangible assets, we're using the same principles, but the concept changes. Like the certain things, like depreciation is not called depreciation in intangible asset, it's called amortization. But everything, exchange of assets, changes in estimates, everything remains the same. It's the same principles. Now, good luck, ne? See you after recess.
Sharp.
Sharp.
Thank you.
Where's that recording count?
Will you share the recording link on the group?
Yes, I will do that.
Thank you.